get this recording started. Had to free up some disk space. I think it's time to upgrade the PC, to be honest. It's been a minute. It's lasted me a long, long time. All right, cool. So, per usual, we got a lot of new faces in here, so we're gonna kind of like break down what it is that I usually do. Everything I do, I like to do it systematically. I like to follow a system. I don't like jumping around everywhere, kind of just doing random shit based off of intuition. That's not really my style. I really like to go through step-by-step processes that keep it to where when I jump on these charts, I already know what it is that I'm going to be doing. I want you guys to think about it like for those of you that work a job or who have worked a job, which I'm assuming is pretty much everybody here. When you get to your job, right, you're not thinking, what is it that I should do first? Should I do this? Should I do that? Should I look over here? Should I look over there? You already know what it is that you're going to do. You have systems and protocols in place that keep you from not having to kind of, guess around and waste time, right? You know what it is that when you get in there, you know what it is that you're supposed to do, right? We got to treat the charts the same way, especially if we want to treat this like a professional job, right? If you actually want to be a day trader, like we talked about yesterday, you got to take this shit seriously. If you want to gamble, I mean, then maybe you have fuck you money. If you got fuck you money, don't listen to what I'm saying. But if you don't, and you're trying to get that fuck you money, you got to build these systems in place, right? So, like we've been talking about on dollar, right? We'll start with a fresh chart on here. So a lot of our analysis is always coming from weekly charts and daily charts, right? And real simple, we're only looking for pretty much maybe like three things, right? So the first is we want to identify, and I know this is kind of review for a lot of you guys that have been here with me for the past few months. Um, but we want to identify IRL and ERL. And IRL and ERL is just a fancy way of saying fair value gaps and swing points. And I'm not really going to go over, I mean, we could briefly gloss over what a fair value gap is and what a swing point is, but that's something you could look up on YouTube and get like a 5-minute video. It will teach you very quickly, but we're looking for these gaps in price, right? So fair value gap, so when candle 1 does not touch candle 3's, or when candle 1's high does not touch candle 3's low, notice that we form this gap right here where there's only buying, right? So when we say internal range liquidity, I want you to notice how it's inside of the range, right? Liquidity, fancy way of saying money. And what kind of money is in here is unfilled orders, right? All these guys were buying so quickly that we left this little gap in price, right? So we find that internal range liquidity and then we look for that external range liquidity, right? Which maybe we'll use the daily to highlight this a little bit better. Um, but yeah, the first thing that we're doing is we're trying to identify IRL and ERL, and then we're trying to look for inside of those swing points, we want to see a candle 2 close, right? Where candle 2, if you guys already know, swing points are 3 candlestick patterns, 1, 2, 3. This is a swing low. How can I verify that? I look to the left, I look to the right. If candle 2 is lower than candle 1 and 3, then this is a swing low. So when we get a candle 2 close back inside of candle 1's range, or very close to it, right? We didn't necessarily get the ideal one here, but it's close enough. We'll pretend like it did. Um, then that gives us opportunities to trade in candle 3, and typically in candle 3 trades, um, they're very, very reliable, right? We get these continuation candles where they're highly directional. So just to kind of show you, we'll jump up on this chart real quick, just to kind of highlight what it is that I'm talking about, right? So if we jump up on the monthly, right, I want you to notice we have an IRL here, right? We have a fair value gap. We get a candle 2 close back inside of candle 1's range. Look at candle 3. Highly directional. If we can position ourselves in these kinds of candles, it's going to be really hard to lose, to be honest, especially when we're short biased, right? We're not looking for longs in a bearish candle 3, right? Same thing here. This is how we caught this last move. Same thing. We're repeating the same processes over and over. I'm not throwing in a bunch of new junk and getting all crazy technical. There's not a fuckload of lines on my chart. This chart is not going to give you a seizure, right? Because I know we see a lot of that, right? So we hit a high time frame key level, right? So the assumption becomes when we hit IRL, we should target ERL, right? The market only does those two things. It offers fair value and it targets liquidity, nothing else. So we hit this fair value, then we target liquidity, right? So we get that candle 2 close. There we go. There's a candle, nice candle 3 move right there. Here's another example, right? We hit that fair value gap. We have this external range liquidity. We get that candle 2 close. Look at candle 3, look at candle 4. These are the kinds of moves that we're really trying to catch. Okay? We're trying to position ourselves in high time frame candle 3s because again, if I were to simply just map out what a candle 3 price action looks like, right? We'll map out a couple here. We'll map out that one and we'll map out the one we're currently in and we jump on the daily, right? We have some time frame alignment, which I know is probably new. Look at how directional these moves are, right? We get highly directional moves. If we're going short in here, it's going to be really easy for us to capture these moves, right? Same thing on the weekly. The weekly is a high time frame. We hit IRL here, get a nice candle 2 close. Let's look at candle 3 price action in the view of the 4 hour, right? Again, highly directional, right? There's a big difference in between trading something like this and trading something like this, right? Where if you're in here, real easy to get chopped up. And here, it's a lot more difficult to get chopped up, especially if you guys are positioning yourselves early candle 3, right? You position yourself somewhere around here, the likelihood that you get stopped out is very low unless you're like trailing your stop or, things like that. So, that's the framework in which we work in, right? And that's just framework. That's just me glossing over it just to kind of give the new guys a little spiel. Another thing that we really work with, which I'm sure a lot of you guys are familiar with, is trying to frame a power of 3 movement, right? So power of 3 is accumulation, manipulation, distribution. A lot of the things that we learn here together are in pairs, or not pairs, I guess, but in whatever you want to call it, in threes, right? ERL, 3 candlestick pattern. Fair value gap, 3 candlestick pattern, right? Power of 3, accumulation, manipulation, distribution. So anytime we can frame this kind of movement, it makes it really easy to follow price, right? Another thing that we like to utilize with this is market maker models, right? So let me grab one real quick. Let me grab the schematic. We are trying to find this schematic on the chart constantly. Um, and the more familiar we become with this schematic, you know, the more we kind of build some muscle memory with it, right? And we already know, for those of you guys that have been with me, the way that we find market maker models is by doing exactly that first step. We have to identify high time frame key levels. Make it super easy. What kind of key levels are we looking for? Only IRL and only ERL. Super simple framework. Once we find once we find that high time frame IRL or ERL, right, and we hit one of those levels, finding the market maker model becomes significantly easier because then we just go to the paired time frame. We did our high time frame analysis on the monthly, right? So the paired time frame for that would be the daily. And we can see on the daily that this market maker model is pretty, in my opinion, it's pretty clean. It's not the cleanest, right? This schematic is not always going to be picture perfect. Um, but uh, remember that market maker models and IRL to ERL moves are essentially just accumulation, manipulation, distribution. So being able to kind of frame this, right, and we hit this key level, we know that the smart money reversal is occurring. Maybe we don't enter in here, right? Maybe we need a little bit of confirmation that we've entered what we call first the buy side of the curve, then the sell side of the curve. When we can find out which side of the curve we're on, trading in the direction of the trend becomes significantly easier, right? And so this is why you guys don't ever see me using moving averages or trend lines. I don't need them, right? I mean, they're not bad to use. I'm not knocking anybody who uses them, of course, right? Even ICT himself in the Went series, he uses them, but um, generally speaking, I can, just eyeball it. Are we in the sell side of the curve or are we in the buy side of the curve, right? And I don't need to any moving averages to tell me that this is trending down. We're definitely on the sell side of the curve, right? So anytime we can frame that power of three or use this schematic, it makes our job significantly easier, right? So just a little bit of background information on my style of trading and how it is that I like to navigate the markets. If you guys have any questions, feel free to ask. The series that I was referring to in which he uses the moving averages is the Went series, the what every new trader wants to know. Um, that's a really good series. That's the first one that I started off with. It was very helpful for me. I believe he uses the 7 and 28 on the weekly to establish his bias. Um, N series is good too, but I'm talking about the Went series, like what every new trader wants to know. This one. Yeah, yeah. Take a look. It's some of his older stuff, which I like a lot of his older stuff. And if you guys don't know who ICT is, that's the modern day father of technical analysis. My opinion, most logical form of trading you'll find out there. The caveat is that his work is extremely dense. It's really hard to kind of chew through. He makes you work for it for sure. So there's people like me that will take just I'll cherry pick a couple of his concepts, as you guys can see here, and I only use that, right? Which he also advocates you don't need to use everything. Less is more in this game, right? We don't need to have so much stuff on our chart. Um, so all that aside, getting straight into it. Like we said, we're looking for this low to get hit, and like I told you guys, it's permissible to trade the next candles as long as we've closed below the previous one. So we look at candle 2 here, we closed below it, right? We can trade the next candle short. We close below this one, we can trade the next candle short. As soon as we don't do that though, that's when I would start maybe you know, taking some foot off of the gas, so to speak, right? Another thing that I really like to kind of abide by most of the time is after 3 days of heavy expansion, I take my foot off of the gas, right? So we have 1 day of expansion, 2 days of expansion. This will be our third day of expansion. After that, especially if we hit this low, we'll have to be a little bit careful, right? Because we may get a retracement into one of these IRLs, and then we could look for a re-entry to go back short for these relative equal lows, and then of course the target that we've been talking about for pretty much months now, right? All the way back in April, we've been really eyeing this 60K low. Obviously, after we got that weekly change in state of delivery, we started trading long, right? We changed our target to the monthly fair value gap or the premium weekly fair value gap up here, right? I just use the monthly because it's a little bit more concise. But yeah, right? We've just been working within this framework right here. We hit IRL, so we know we should move to ERL. We wait for candle 2, and then candle 3 should be highly directional, like we've seen these past few days, right? So I'm still waiting for that low to get hit. Um, and yeah, like I said yesterday, I'm really happy with our analysis. We had this order block respected, this order block respected, this order block respected. Um, and price is just really, really shooting to that downside, right? So our next target will be here at 65, and then after that, we'll look at this low over here at 62, these relative equal lows, and then our home run target 60K even, right? So that being said, we'll jump back to dollar real quick and we'll talk a little bit about dollar. So we had this daily fair value gap mixed with this volume imbalance. If you guys only trade crypto, you don't really have to worry about volume imbalances because this price signature only occurs in markets that are not 24 hours. So Yeah, so in BTC, so you won't really see these too much, but we combine them. Whenever we have a fair value gap and a volume imbalance, we like to combine the two, right? So like we talked about with dollar, the reason that we do analysis on dollar is because not we're not trading dollar. I don't know anyone that is trading dollar personally, but we use it as kind of a bellwether to tell us whether risk on or risk off assets are going to perform good or bad. So the assumption is when the dollar is moving up, risk on assets should be moving down, right? So we see dollar moving up pretty heavy today, right? We see Bitcoin moving pretty heavy down today, right? So, like we talked about, we had this IRL, and like I told you guys, we like to frame some accumulation, manipulation, distribution, right? Notice this cluster is really, really tight, right? This is really, really tight price action right here. So there was our accumulation. Here's our manipulation into the key level of the daily fair value gap. And now we have distribution, right? Almost like we're time travelers where we've been able to catch this move pretty nicely, yeah? So, really nice to see. Obviously, the next target we're looking for on dollar, we're already pretty close to. I think we may have already hit it. See the high 99,552, and then 99,544. So, almost there, yeah? Pretty sure. Yeah, yeah. So we're almost there. Almost gonna hit that high. Um, so yeah, that's why we like to look at dollar analysis. If you wanted to get even more technical, you would actually do your analysis on bonds, because bonds are what move the dollar. So if you know what bonds are gonna do, you know what dollar is gonna do. If you know what dollar is gonna do, you're gonna know what risk on assets are gonna do, right? But me personally, the simple, the more simple, the better. Um, Obviously, right, we have a little bit of decorrelation here with NQ just not giving a single shit about uh, what we're doing over here, right? What dollar's doing. It doesn't care. I still do think, right, we already know anytime we have relative equal lows like this, price really, really likes to book it to those either relative equal highs or relative equal lows. And we saw that on Bitcoin, right? One of our first targets before this whole move happened were these relative equal lows, right? And we saw how price was just drawing to that level. We have those draws on liquidity so that we know where price is essentially being magnetized to. And I'm not a fan of throwing the magnet on the chart. I know that's a big thing, it's whatever, but um, if I was gonna throw a magnet on the chart, I would anytime I see relative equal lows, relative equal lows, relative equal lows, they're just they're money for liquidity wanting to be drawn to those levels. So anytime you see symmetry in the market, expect it to be made jagged at some point, right? So yeah, we'll jump onto ETH. ETH targets being hit, so we'll take them off, right? Our last target, this is our home run target for ETH, and we essentially did the same thing, right? We had this weekly fair value gap up here, right? We hit it. Oh wait, we're using monthly? Nah, we're using weekly. Um, then we got a nice candle 2 close. We got a couple candle 2 closes. We got one right here. This high is protected. We got another one here. And then price started that move to the downside. Yeah. So this is our home run target for ETH. Obviously, after that, we would be looking at maybe this fair value gap and then this low, of course, right? So we'll have those mapped out as our next targets to the downside. Um, these two are pretty synonymous, so I wouldn't be surprised if we hit these levels, got a little bit retracement, and then start moving back down, all the way down to 1300, which I know is pretty crazy. I never thought I would see ETH this low again, but more than happy for the opportunity to scoop some up around those levels. Long-term DCA targets. Let's do this analysis first, and then we'll go over it. And I also didn't forget about XRP, but that guy is gone now. I'm telling you guys, some of these guys just don't have the attention span to sit here. Not to mention he came in here saying "suck it, my boy," and then just fucking left, which I don't know, it's kind of weird, but whatever. Same thing on Sol, right? We had this weekly fair value gap capping price. We swept this high, right? What does it mean to sweep a high? It means that we only take out a high with a wick, not a candle body close, right? Whoops. Um, Not a candle body close like this, right? We have a high here. We got a candle body close above it, right? And this one is just a wick. So we swept a high inside of this weekly fair value gap on Sol. Let's see the monthly. Mm, well, we did get that monthly C2, right? And then there's a that monthly C3. But yeah, that was pretty much our analysis on Sol. We've now hit the midpoint of this reversal wick, so that's a target hit. Wow, all our targets just getting crushed this week, man. And here's our home run target of $67. After that, I mean, man, uh, the next thing for me would be this monthly fair value gap, really. That's going to be at 58. So we got a ways to go. We can see prices still expanding pretty hard. So that'll be our next target after our home run target gets hit. So we'll be looking for that. Let's take a look at Hype. Hype has been really good to us, been treating us very nicely. We got that change in stated delivery, right? And ever since then, we've been on the move. We had this daily fair value gap, right? We didn't get that ideal candle to close, but like we spoke about, sometimes when price is just so aggressive, it really just it's gonna take that nearest fair value gap and it's gonna run with it. Here's the model that we've been teaching, right? We hit that high time frame key level. We're looking for inversion fair value gaps or change in stated deliveries. There's the inversion. There's the change in stated delivery. So, I mean, that offered a pretty nice move. Whether you took it from the inversion or the change in stated delivery, that's already 2R. And obviously, like I told you guys, anytime you guys see relative equal highs, relative equal lows, they are super good draw on liquidity. So, yeah, I think hype is just gonna keep blowing through all these levels. I have this 4 hour fair value gap being respected here. There's that candle 2 close. So yeah, I think that this is our next target. And with the standard deviations, like we talked about last time, we're looking for this level up here at $82. So let's see hype do the dance. But pretty nice price action, yeah. What else? What else? Gold. Um, Gold's being a little bit tricky. We got that daily change in stated delivery already, but it doesn't seem to be being respected very well. Thus, I mean, ideally we don't hit this low. If we hit this low, then this order block's out of play. But we're just waiting for a candle 2 close to happen here so that we can start targeting these ERLs up here. But no candle 2 close, no trade. We follow the system protects us. Like we spoke about before, right? We're using this weekly volume imbalance as our key level. So if we close below that this week, then we're gonna have to reevaluate and potentially flip bearish, right? Yeah. I mean, we've been bearish, but um, we're open to the idea of potentially a bullish move happening because of this weekly volume imbalance. But we'll see. We've got 2 days left in the week. If we close below it, next week we'll start looking at maybe some gold shorts. Um, Back to oil. Like we talked about, we hit this ERL over here. We got a nice candle 2 close, right? And move into this gap. So we've hit this gap now. Like we talked about, right? We got this consolidation up here, kind of looking at that market maker buy model. Let me just pull up that schematic for those of us that are new here. Here we go. So again, we're always trying to frame accumulation, manipulation, distribution, right? AKA this schematic, right? And the smart money reversal, the white part of this always has to take place at a key level. So oil's looking good for a move up. I mean, get ready to pay some more extra shekels for the gas. But yeah, we've got these relative equal highs up here, and definitely looks like we're on the buy side of the curve now. So I would make the assumption that we're probably headed up here. Euro, okay, we haven't done Euro in a good minute. We'll start off with a fresh chart. Let's take a look at this weekly. Okay, so we had this weekly fair value gap, right? Same thing, same process. Weekly C2. So we closed back inside of the range. Here's this weekly C3. So the assumption would become that we are headed for this low here, right? Not the cleanest market maker sell model, that's for sure. But we do have these relative equal lows. Um, so definitely I think we're coming in lower, right? Dollar's moving up, euro moves lower, like we talked about right now. But yeah, dollar and 15 cents. Well, I guess we're already at a dollar 15 cents, but dollar 15,765 I think is going to be that next target for us. Obviously, could definitely take some off here as well if we're already in a position, but we haven't talked about euro, so yeah, I think we're definitely headed lower there. Okay, we got gold out of the way, oil, euro. Let's do some Tau. Let's see what happened with Tau. So we didn't hit this fair value gap. We talked about this inversion fair value gap, right? So once we closed below this level, I mean, you had to be bearish at that point. We were targeting this low. We already hit that, so we could take it off. Yeah, I mean, got that C2 closed. There's that C3. There's that C4. Cleaning up all of these relative equal lows. That's pretty nice. Um, I would potentially be looking for shorts next week, not this week, because look, guys, NFP is on Friday. So, you know, you want to gamble, you trade that Thursday and you trade that Friday. We should already be done at this point. Um, we shouldn't really be looking for much else. I mean, especially with the moves we've gotten this week, really no reason to, try and squeeze out more from the markets, right? But we got that daily change in stated delivery, so I think a retracement for next week up into here and then back down into whatever ERL we leave down here, I think would probably be good short. Let's take a look at Zcash. Were we working with the 4 hour? So we're looking for this retracement. Not sure we get it, but yeah, we're still waiting for that, right? We're forming this kind of accumulation up here. So I would like to see a manipulation, right? And then distribution back up if Zcash is going to still be printing like that, right? And what do we have up here? Relative equal highs every time, boys. Systematic. So that looks pretty good. What's this big green thing we have here? Okay, that's our weekly order block. Yeah, and then we got that C2. There's this C3, right? Take off the drawings just so we could see it a little bit better. So we hit this weekly order block, right? Candle 2 closes back inside of candle 1's range. So candle 3, we expect to go higher into these relative equal highs, yeah? So let's see. Definitely we're looking for higher on Zcash. Sui? I haven't heard anyone want Sui in a while, so unless somebody requests it specifically, then I think we'll pass. Like we talked about, we jumped up on the 4 hour. We took the discount part of this fair value gap. We didn't take the whole part, right? We're trying to be a little bit more surgical. We got a really, really nice reaction from IRL to ERL, right? And what do we have here? Right, we have another IRL to potential ERL move. Ideally, we get a candle 2 close. We haven't gotten it yet. That's a good reaction from the fair value gap, but ideally, we want a candle 2 close to trade back up into this high. So we'll wait for a candle 2, and then we'll start trading up into here. So we'll write it here so we don't forget for next time. Say candle 2 close question mark. That's going to be our prerequisite if we want to take a long on near. If you're already long, you don't want to see this closed below. We want to see this respected. So yeah, near still looking pretty solid. Let's look at ton. So ton, we had this order block here on the 4 hour. Were we using a daily one? Yeah, we're using this daily one. So we've been waiting for this pullback into this daily order block. Um, I want to see a daily C2. So we did make a low here. So if we close today above this candle, then I think tomorrow will probably be good for longs, if not next week, right? Because then we would assume that we would take that move all the way up into there. Um, yeah, this 4 hour fair value gap not doing us much justice, so we're gonna stick with the daily. So let's go ahead and wait for that daily C2 close, and if we get it, potential longs. Like I said, I wouldn't trade tomorrow. I wouldn't trade Friday. I would just save it for next week. Wild looking monstrous per usual. We hit our target, so we could take that off there, right? So again, we're gonna find our premium and discount. We're going to map out the discounted fair value gap, and we're gonna look for a move back into year, right? Now, more aggressively, right? We know that it doesn't necessarily need to go into the discount. It's just higher probability if it does. We could definitely get something like this where we move into just the 4 hour one and move from there. If you guys see on the 15 minute that we start curling up from this 4 hour fair value gap, and it's pretty convincing that we're going for those highs, then you already know what to do, right? What else? I think that's pretty much it. Am I missing anything? I'm missing something. I know what I'm missing. Missing some grass. The newest addition to Kick-Ass's fundamental plays. Right? Let's see the weekly. Ooh, okay, okay. Ideally, I would love to see us move into this weekly fair value gap. It's really nice. We got strong displacement out of this range over here. Um, so let's see if tomorrow and Friday can kind of get us into this weekly fair value gap, and then we close this week as a C2. Ooh, that would be money. Then I'd be really looking for this high up here. Um, relative equal highs, relative equal highs. We got a lot of low resistance liquidity, right? And look at all these built up lows right here. Those I really, really think that those are going to get taken out. So we can get a nice framing here of accumulation, right? Manipulation, distribution, right? So we'll be looking for that on grass. That's going to be my plan personally. So much liquidity on both sides, right? Relative equal highs, relative equal lows. So you guys already know. We've seen this setup about 100 times already. Um, Kick-Ass was sharing some analysis. Let's take a look at it. Okay, can you guys see this? Oh no, yeah, you guys can. All right, cool. Let's see. So right here, we're on the 4 hour. Okay, we're using trend-based fibs. I have not seen a trend-based fib in quite a minute. Okay, so he's got this ERL mapped out. Yep, he's looking at a lot of the same things we are. He's using this change in stated delivery. The only thing about this change in stated delivery though is that I would really, really like a sweep first and then a change in stated delivery. That would make that a lot higher probability for us. I'd be much more comfortable jumping on board if we get that. Yeah, okay. So we're looking at pretty much the same thing. Um, Grass is apparently really good on revenue. I've been farming grass for a long time. I don't know if you guys have ever noticed it on my extensions there, but yeah, I've been farming grass for quite a minute. So, yeah. All right, cool. Any questions? Any comments, concerns, wins, losses, charts? That's exactly what Kick told me in the DM. Yeah, bro. Kick-Ass is on fire with these plays, man. Yeah, yeah, exactly. You guys already know the deal. All right, cool. Well, if there's no questions and we're all good to go, we can start to wrap this up. Really appreciate you guys pulling up. Really, really strong week, boys. Like we've been absolutely crushing it. Um, Really no reason not to be getting in here, yeah. It's a really good information, I think. No problem. Thank you guys. Looks like we're in altcoin season without knowing. Yeah, potentially, man. I think BTC's got to catch up to indices at some point. All right then, fellas. Once again, really appreciate you guys pulling up as always. I will see you guys tomorrow, and then Monday we can start game planning some new plans. And yeah, enjoy the rest of your guys' day. We'll talk soon, same time tomorrow. Peace out, boys.